Hi, you're listening to the Stefan Livera podcast, a show about Bitcoin and Austrian economics. Today for episode 210, Sergej Kotliar, CEO of Bitrefill, rejoins me on the show and we're chatting about how to watch Bitcoin's mempool, what tools we should use, the implications of a Blockspace market, and we also talk about Lightning adoption and privacy, as well as Bitcoiners on COVID. This show brought to you by Swan Bitcoin. If you are in the US or you have friends in the US, absolutely get them on to Swan. The process is so simple, a no coiner could do it, and they are Bitcoin only. So step 1, auto fund USD from your bank account. 2, auto stack your Bitcoin. And 3, withdraw that Bitcoin to your cold storage. Swan does not charge withdrawal fees. They want you to follow Bitcoin best practices, and they crush Coinbase's fees for recurring buys by up to 80% and Cash App's fees by up to 57%. So set and forget. Enjoy your life. Just Swan and chill. Go to swanbitcoin.com/Livera to start auto stacking with Swan today. Use that ref link to get $10 of Bitcoin dropped into your account when you start stacking with Swan. This show also brought to you by Knox, a Bitcoin custodian dedicated to ensuring their insurance protection covers the full value of their customers' assets. So if you're a Bitcoin company, investment fund, trust, or family office, you might be looking for this kind of solution. So for example, suppose a fiduciary wants to hold $250 million of Bitcoin with Knox. Knox will seek to obtain $250 million of insurance dedicated exclusively to that account and adjustable to volatility. No fractional coverage or narrow scope. Insurance for what it's worth, a tool to transfer risk. Knox is backed by investors such as Fidelity Investments Canada, Initialized Capital, and Inovia. The website is knoxcustody.com. Next is the Cipher Wheel produced by CipherSafe. So this is a metal seed backup product for your Bitcoin 12 or 24 seed words. So when you create a Bitcoin wallet, such as a hardware wallet, you've got to write down that 12 or 24 word seed. Now, don't just keep that on a piece of paper, keep that on a metal backup that's fireproof, waterproof, rustproof, petproof, and tamper evident. The cipher wheel is in a wheel shape, and you get tiles, and you slide them in, 4 letters per word, and you can also get a padlock tamper evident seal so you know if it's been opened. Don't leave it to chance, just make sure that your loved ones have access to your Bitcoins if an accident occurs. You can go and order yours at cyphersafe.io and use the code Livera to get 10% off. This show also brought to you by Unchained Capital, Bitcoin native financial services. Unchained are building their products on the foundation of multi-signature. So if you're thinking about your Bitcoin security and you want to upgrade from single signature to multi-signature, or even just go straight zero to multi-signature, Unchained can help you out. They're offering a Vault Concierge onboarding package. So you can get a guided setup call and have hardware wallet devices mailed out to you. And the prices range from $1,500 downwards, depending on if you've already got the hardware wallets, and use the code Livera for a discount there. Unchained also offer Bitcoin-backed loans as well, so if you need liquidity, this is an option for you. And they've also got a range of incredible content on their website, so make sure you go and check them out. That website is unchained-capital.com. Here's the interview. Sergej, welcome back to the show.
Happy to be back.
So, Sergej, I know you've got a lot of interesting things that you're chatting about often, and I know one that you love to chat about is the mempool. You're a big mempool watcher, aren't you?
I like to think so. But I'm not alone anymore. There's a good group partaking in this lovely hobby.
So what are some of the things that you would keep an eye on, mempool-wise?
Well, I mean, like for me personally, we consolidate our coins on the weekends at Bitrefill, and so it's important to get a low low cost. I think that's the original motivation for it. So yeah, I look for what the fees are, who's bidding how much, and so on. But you kind of also see like a lot of interesting things, like lots of large chunks of transactions being dumped, and sometimes you can click into them and see what's going on there, and you kind of learn. Like I think for me, one of my motivators has always been to understand this field that we're in, and there is a lot of, as you know, a lot of different kinds of bullshit and disinformation, but something that's not bullshit is what you see on the mempool, I guess. And so that's I think another reason why I like looking at it.
Do you have any preferred Mempool watching tools, or are you just more like a command line wizard style?
No, actually, I use tools. I use Joho's colorful chart. I think many people know, and more recently been using Mempool.space a bit. I also have this one called the fee calculator by Bitcoin Worldwide.com, which shows the top two blocks, like transaction by transaction, and you can kind of see the big ones there. I think that's my secret weapon here. And then fork.lol as well. Obviously not specifically for the mempool, but generally for. I have like a couple of tools.
And so then if you found something that you want to try to dig into further, what's your process then?
Usually I check them on oxt.me, and they get basic clustering and find out which entities are what.
Yeah, so I guess just for listeners who aren't familiar with that, can you just tell us a little bit about what that clustering is and what kind of information you are able to glean from it?
So xt.me is I guess a block explorer type service that does a relatively rudimentary chain analysis algorithm where it basically checks which transactions appear to be coming from the same entity. And there is some like user generated info about who people think which entity is, and it's free and open for everybody. You need to have an account, but you can just sign up for an account, and it's pretty good. And you can, not always, but oftentimes you click around a little bit. And like, that's Binance, or like, that's Coinbase.
So with that, you can then start to understand, okay, a whole bunch of transactions just hit the mempool. I'll go and search that transaction ID, for example, and then see, oh, okay, this is coming from the Binance cluster, something like that, right?
Yeah. I mean, in practice, the interesting thing is just to overbid them by a fraction of a 0.01 sats per byte. That's the real sport. But if you're curious about who suddenly dumped a couple of megabytes of high-paying transactions of the mempool, you can get an impression. I mean, that's how. If you remember, some time back, I was yelling about BitMEX and Coinbase, and most of it came from just things like that and just seeing them over and over again.
Right. And so I think you were commenting then, and this is probably still the case, is that many of Bitcoin's transactions are actually inter-exchange, right? That was what you were saying, right?
Yes. And we did some math on that lately, and I think it landed at 55%, if I remember correctly. Or not inter-exchange coming from an exchange, but you can kind of assume that if it's 55% from, then it's probably 55% to. But I can't really prove that.
I see, yeah. So I guess how would you distinguish then? You might look it up on OXT to see if it's going from one exchange to another, or as you were saying, from exchange, meaning probably out to somebody's own wallet if they're doing a withdrawal, right?
Right. Well, I mean, you can... For that metric, we just looked at what percentage used batching, and because if you use batching, then you're some type of entity, right? You're not a regular person with a wallet, and so based on that, you can estimate a lower bound, which was 55%. And you probably add a little bit to that, so 55 is a lower bound.
I see. So this is batched on the exchange side, and I guess the heuristic you're applying there is that most individuals, although they can technically do a batched transaction using certain wallets that have that feature, most people are not. And so I guess that's also another way to sort of understand a little bit about what's going on the chain and who is using it, right?
Exactly.
And so you would also see other Bitcoin businesses doing their own consolidations or their own periodic. Like, for example, I think BitMEX is known for doing a daily transaction. And at that time, it just a whole bunch of transactions hit the chain, right?
Right.
I guess, are there any other interesting patterns that people could see? The one that most people kind of colloquially understand is that most of the transactions during the week, they're kind of a bit higher. And then usually on the weekend, it's a bit lower, right? That's essentially your experience. Are there any other patterns that you see around that kind of thing?
Yeah, I guess those are the main things. I mean, it's pretty clear that we're seeing tendencies towards something that might be called a fee market, or maybe even that there's two different fee markets, like one for during office hours and weekdays, and one for the weekends. Um, which is interesting, but I still I think I remain one of the let's say skeptics on the free market concept. Um, Not that I don't want it to happen or think that it would be good, but just that I think that for a market to evolve, it's it's markets need to have human participants. It needs to have a majority of human participants that decide, hey, do I want my transaction, and how badly do I want it, and so on. Whereas if the vast majority of all transactions are done programmatically and not actively monitored by a human, um, then sometimes these things can be not exactly market related, right? So you have things like, I guess, when BitMEX does their dump at 9 a.m. Eastern time, that kind of pushes the averages for the whole network significantly higher for the rest of the workday, U.S. Eastern time. Um, but there's also things like, if you're certain exchanges just always want to be in the next block, and how they will deal with it when that's no longer possible, I don't know. So it becomes this this, I guess, algorithmic bidding war. I guess, like we saw in the past on Amazon, where you would have products selling for 1 penny, because they were configured to always outbid their competitor, and the competitor also outbids their competitor, and so on, and then it becomes a race to the bottom. And we definitely have these types of things going on in the free market right now, which is why I'm like a little bit cautious to declare that we now have a free market and everything is good, and or things like some people count how much fees were spent in a day and see that as an indication of a viable free market.
Yeah, I see. And so part of what you're talking about there also comes to fee estimation. And so Bitcoin wallets have to try and estimate what sort of fee do I want to put through, whether it's a low, medium, or high priority. And then that will determine how many sats per byte. So
Right.
I'm wondering.
And that's obviously super tricky to do, because you can't. It's hard to predict the future, right? It's like driving a car while only looking in the rear mirror. Like it's hard. They do the best they can, but it's a tricky area. And again, it's weird that it's not. You maybe it would be more efficient if people did a blind bid, just like, I might be willing to pay this much, but now you see all the transactions and you can just outbid them uh, by uh, by a fraction of a sat.
So, jumping into that a little bit further, as an example, you might be looking to do a transaction, and then you might look up on mempool.space or one of these sites and think, oh, okay, I don't care that much about next block, but maybe I'll target for, say, the third or the fourth block sort of thing. And then that might come back with, oh, okay, you need to put it at 10 sats per byte or something like that to get it in, or whatever. And then you might put that in, but then as you put that in, it might get away from you because a lot of other people might put their transaction in as well, right?
For example, and so for example, again, if we talk about the BitMEX dump, if you don't know that it's going to happen at 9 a.m. Eastern time every day, then you might think that you're the highest bidder, and then poof, and then suddenly you're outbid and you're stuck for the rest of the day. And there's these things that people don't know about enough, and it's hard for an algorithm to know that. I guess at some point, if the algos had some level of AI, they would learn that every day at this time, usually this happens. Yeah, but it's, I mean, it is hard because they're just programs.
And some have tried to criticize BitMEX and say, oh, you guys should, whatever, spread it out or do other things. But would that also change in terms of, maybe it's a good thing that it's more predictable for people?
I guess. I don't think it is in the sense of how given that the fee estimation algorithms only drive by looking in the rear mirror, it actually makes it less predictable, um, paradoxically. But I mean, look, I don't want to talk too much about them. I know that they have smart and good people, and that they are working at fixing this particular issue. Um, and we've bugged them enough. I think they know and are aware
Of course. Yeah.
of their impact. And it's not just them. I mean, there's a lot of different companies and entities that periodically do this, and it's curious to see. I mean, it's in a lot of ways it's like I guess a bragging thing if you like. Spend a couple of bitcoins on transaction fees when you didn't really need to. That's like it's a power. It's a power move. It says something about the company
that you can afford to do this. Yeah.
Hey, it's just a Bitcoin. I mean, come on, right? And you see those every once in a while, and that's curious too.
Yeah, and then the other thing is it's a whole dynamic around there might be a time when, let's say, a large custodian wants to do their consolidation, and so they might wait for a good time and then put through a big consolidation at a very low sats per byte, because obviously that's better to do it at that time.
Right. Yeah, and that's what we do, and many others. But there's also quite a few that consolidate at high fees, which ends up costing them a couple of bitcoins each time.
Oh, well, that's the power move.
It is. You have to respect it.
One other thing with exchanges. So do you see it like exchanges will start to offer, say, low priority withdrawals? I know, for example, Bitteroo, an Australian exchange, they offer that as a feature where you can actually say, I want a low fee, low priority withdrawal. So I want to pay less and get it for cheaper. Do you see that as a coming practice, or what's your view on that?
Yeah, I think so. And I mean, and that's what would need to happen for a fee market to be to have appeared, is when all transactions are a little bit like that. In the end, there is someone deciding, some person deciding for each individual payment how much they would be willing to pay for it. So I mean, it's heading there, but it's as everything in this space is heading much slower than what I would have liked.
Yeah. I also want to chat about there's a funny sort of seesaw effect as well. So I mentioned this on my recent chat with Resbeef from Lightning Labs as well, and we were just chatting a little bit about how there's this funny dynamic in the Blockspace market where it's kind of like, for an initial period of time, companies they might not care that much about doing SegWit and batching and using Lightning and all these efficiency things because it just doesn't cost them enough and they don't care enough. But then it gets to a point where the fees are that high, and now they get pushed into using some of these, smart engineering tricks and engineering methods to try and basically get more for less. But then maybe then the seesaw goes back the other way, and then now it's like the fees come really low again. Do you see
Correct.
that dynamic playing out over the next few years?
Absolutely. I mean, and it doesn't even need to be like that. I mean, it's very simply you have. I mean, when you run a company, you shouldn't optimize something that's not a problem. And so when it becomes a problem, you optimize it. And so, I mean, this is why I've had long discussions with core devs about this as well. That, like, the theory of the never-ending mempool, never emptying mempool, that it's it remains to be seen, because every time that there is fee pressure, a lot of people start optimizing. And when people optimize, then that relieves the pressure, and eventually it goes to zero again. And so the question is, will this even out eventually? And it's hard to know, because it's a little bit like saying that eventually we'll run out of optimizations. And I'm just not sure that that's the case. I think there's always going to be optimizations of all kinds of, depending on, eventually, if the cost is high enough, then people are going to start doing all kinds of interesting trade-offs to avoid paying. So that's kind of, I guess, let's say that I actually do think that we will see a meaningful. If you made me bet, I would bet on that there will be a meaningful fee market eventually in Bitcoin. But I'm just saying that it's not a certainty, I would say.
Yeah, I see. And so we might see it play out, and I guess most of us, obviously you and me, and probably all my listeners, or most of them, would be very, very bullish on Bitcoin. We see it like a lot more people are coming into this space. It's a question of time, and maybe over the next 10 years or something like that, then really we'll see a lot more people come in. But as you were saying, it's a question of how good will all the clever engineers get at packing more into less to then have that sort of seesaw effect happen, and then the fees come back down to very cheap levels. And I guess, as I'm sure you are very well aware, longer term, Bitcoin does have to transition into having a block space market where there's like a solid base load of demand to provide the additional revenue for the miners, because there might be some bad implications if it doesn't develop within, let's say, 15 years, something like that, right?
But
What would you
15
say?
years is a very long time, and we have to remember that. And this is why, like, the people that are like, "Oh, it's going to be needing inflation and this and that," it's like, look, 15 years, we don't know. If it becomes a problem, and definitely this is a problem that's not going to suddenly appear and hit everybody over the head. It's a problem that's going to evolve gradually, right? And so if it evolves gradually, it will make sense to work on a solution. And I definitely think that over a 4-year halving period, it's something that should be resolvable.
Yeah.
So I'm not like worried for the sustainability of the Bitcoin network for the long term. I'm just saying that we're not yet seeing the evolution of the fee market in ways that some people like to think that we do. The same goes for Ethereum. Like, there was a lot of noise the other day that hey, Ethereum generated more transaction fees on Bitcoin, which is like, yes, they did, but if Bitcoin is unoptimized, then Ethereum is 10x less optimized, because they've never had any fee issues, and a lot of the usage is driven by speculative and investment use, as it is in Bitcoin as well. And so, like, making these comparisons becomes not meaningful, because in a lot of ways you're measuring who's optimized and to which degree, and it's hard to know because you don't see all of it.
Yeah, that's a really good point. It's not an apples to apples comparison, because it might be the case that you could argue that Bitcoin, and I guess colloquially we could say Bitcoin has optimized more around the fees and things like SegWit and people using Lightning and so on. And we should anticipate that over the years, as more and more people adopt these things like Lightning, well, then that kind of takes some of the load off the chain. But given how small Bitcoin is, we will probably see so many more people come into Bitcoin that, on the whole, like eventually, like in 15 years' time or whatever, by then we would likely see a Blockspace market. But I think it's also interesting to talk about some of the implications of that, because, as I understand, if so, there's a few concerns there. One would be, hypothetically, if the block reward, so that's the combination of the subsidy and the fees paid, if that's too variable, we might start seeing funny behavior from the miners in terms of things like fee sniping. People might not be quite happy with the level of mining security provided, so they might need to now wait for more confirmations before having the right level of assurance. I guess there are a few examples. Do you have any thoughts to share on that?
I mean, look, when we see those problems, like, there are countermeasures for these things, right? I mean, you could naively, a miner could just commit X BTC to the next block to encourage the next miner to mine on top of it, and so on. So, like, there's all of these things. I think that when we see the problem, we'll assess, and smarter people than me will assess the different countermeasures, and we'll try some of them, and eventually something will probably fly.
I see. Yeah, because the other issue could be around if there's a lot of reorganization happening. That could be quite difficult in terms of using Bitcoin practically, because let's say it might make Lightning more difficult because, I don't know, maybe you wouldn't be sure about whether you need to like close out your channel or things like that as well, I suppose.
For sure, yeah, for sure. But that's the thing, is like that there are problems, but I think that given that they're relatively far away, in the time that we should expect that there will also be solutions. And as we know of problems, we already know of a couple of these solutions. We just haven't tested them out yet, so we don't know will it actually work or not, and which one will work, and so on.
Yeah, and I should stress we're kind of talking a little bit theoretically here, because I think in practice the most likely scenario is we just see continual 4-year cycles, and each time we bring in a whole new round of people, and Bitcoin is just so small compared to what it will eventually get to that it's, I think in the end it's maybe we're just talking about all this stuff and it won't really matter in the end, because there'll just be so many people who want to use Bitcoin.
Well, yeah, but then too there will be certain problems, so it'll be interesting. Yeah, scalability issues are fun, I would say.
So look, let's get into Lightning then. So Bitrefill has been one of the more well-known Lightning adopters and promoters. Can you tell us a little bit about what you're seeing at the moment, or what you're seeing and doing these days with Lightning at Bitrefill?
Sure. Well, I mean, for when it comes to Lightning, like we've made a let's say big strategic bet on Lightning, given that it's what we think is the most likely candidate for being the technology that brings about the circular economy in the cryptocurrency world. And so we've made a bet on Lightning and made sure to always be first and best and so on when it comes to both using Lightning and but also to some extent building utilities for people that use Lightning and for people that live in the circular economy, that live on crypto and so on. And so for us, we always enable different ways of new modes of Lightning stuff. We see definitely that it's increasing now that transaction fees are becoming meaningful, but it's still niche. And I think that like had you asked me a year ago, I would have definitely thought that we would have been much more further along in terms of Lightning adoption than what we actually are right now. And I think this is a thing in the crypto space in general, that everything moves much slower than we think and than we'd like. And yeah, we're still at less than 10% of our traffic is coming in with Lightning, which I think is low. Like I would have thought it would have been a big chunk of our on-chain volume coming in with Lightning now.
I see. Do you have any speculations as to why that might be?
It's a good question. I think, to be honest, I think the real reason is I think that here's a controversial statement. I think that Lightning adoption is slow for the same reason that the blockchain.com wallet is the largest wallet. In that that there is a certain what do you call it, slowness in when it comes to the masses. And again, the masses are not the people that you see on Twitter, and probably the masses are not the people that are listening to this podcast, and so they will be kind of shocked by me saying these things. But I think that it seems like people aren't quick to jump on the latest new thing, and they need to be motivated. And I think that high transaction fees are one such motivator. And then in the Lightning world, things are different. You still don't have enough exchanges supporting it, which I think is a big thing, given how it seems like the industry is circulating around different kinds of speculative uses. And a majority of traffic is happening between exchanges. It would have been good if more exchanges were adopting Lightning. I think Bitfinex has done an excellent job with their Lightning presence, and I look forward to more major exchanges joining them and building a Lightning network for exchanges, I guess, or just connecting their exchanges to the Lightning Network.
Sure. And so it's probably fair to say Bitfinex are one of the leaders in terms of exchanges offering Lightning. I think River is probably another example where they're trying to be like a technology leader with Lightning as well. So tell us a little bit about how the Bitrefill and Bitfinex partnership arrangement went.
I'd say it went really well. It's a pretty cool integration. You can check it out if you go to bitfinex.com/bitrefill, and it basically runs the entirety of the Bitrefill website inside of the Bitfinex website in an iframe. But the cool part of it is that the payment part actually happens over Lightning. And so it means that there is no, like, we don't keep a balance with Bitfinex, they don't keep a balance with us. Nobody owes anybody any money at any point. But when the user goes to make a purchase, uh, there is an actual withdrawal over Lightning happening from their account that goes straight to us, which is pretty cool. And I think it's definitely the way that these integrations are going to be happening in the future.
Coming back to the Lightning adoption question, do you think that again comes down to the whole hodling and number go up stuff versus the circular economy and spending aspects? Do you think that maybe at, let's say we hit another bull market coming over the next year or whatever, do you anticipate then we'd see a lot more people getting onto Lightning in that way, right?
Well, I think that, yes, I think that once we see more periods of fee pressure, that should drive people towards Lightning. But I also, again, it's not only about the hodling versus the circular economy dichotomy, because again, like a big part of the circular economy is people using blockchain.com. Right, and so it's not the debate is not necessarily what you see on Twitter. It's yeah, I don't know. I think it's just that, I mean, there's different sub communities and cultures, and different of them prioritize different things. I mean, there's a ton of really cool stories about Lightning adoption. The most interesting one is from the community in El Salvador, where they actually have a sort of a small type circular economy going already, which is really cool. There's a lot of these things that are evolving, and there's a lot of people that are like, what do you mean, not Lightning? But there's also like a large chunk of people that they search for Bitcoin wallet in the app store of their iPhone or their Android phone, and they get one of the top options, and it's going to be one of those.
Yeah, so it comes down to default for many people, and if blockchain.com doesn't have it, then yeah. But I suppose in terms of when let's say you are teaching a friend and they just got interested in Bitcoin, would you teach them Bitcoin on chain, or would you actually teach them Lightning first?
It's a good question. It's a good question. I guess it depends on what I anticipate this person using Bitcoins for. Yeah, right. If I expect them to buy them as an investment and hold them uh, in storage for years, then probably Lightning doesn't really make sense, right? And so, whereas if it's somebody who just wants to send transactions, then yeah, definitely. But in that case, it would probably be at least for the first attempts, one of the not your keys types of wallets.
Yeah, so let's say, I mean, for me, I actually do something similar as well. Like I basically try and figure out, well, does this person, are they looking for, the savings technology, number go up stuff? Okay, get them on a hardware wallet or multi-signature if they're, getting enough for it. And then if they're interested in the day-to-day stuff, well then, yeah, I will typically try and show them Phoenix or Breeze at that point, because those are some of the nice kind of easy phone wallets to teach someone who's just learning and they just want like the wallet that manages it for them. What's your experience been like with teaching people Lightning?
Yeah, I agree with everything that you say. I think that those wallets are excellent, and there's a couple of others as well that are really good. And yeah, I don't know. Like to be honest, I don't actually go around preaching Bitcoin all that much in my surroundings. Not sure why. Just focus, I think, on the Bitcoin users that are out there already.
Of course, yeah, yeah. For me, it's more. I'm talking here more like if I'm at a Bitcoin meetup and I'm trying to teach a new coiner, I might demonstrate a quick payment with Lightning or something like
Right.
that, just as a way to kind of give them a feel of what's going on here. But I guess it can be confusing as well. Like, let's say you're trying to teach that new coiner, and then you've got to, like, if they've just seen it for the first time, then you've got to kind of explain, oh, well, see, the wallet can actually swap out from Lightning into Bitcoin, and it's like you probably already lost them already, right?
Well, yeah. I mean, it's tricky. Yeah, all of this stuff is tricky, and in the end, you will need to abstract away all of the channel stuff. Right? But it's always a question of at which point do you abstract away the controls, or do you optimize for the power users that can handle the controls, or do you figure out ways to satisfy both? That's a common UX problem in the field.
In terms of Lightning, obviously one of the big ones is around having incoming capacity and so on. And I know this is something you have a service around that. Can you tell us a little bit about your experience in terms of offering that service and just running one of the well-known Lightning nodes?
Right. Well, I mean, we built this. I think it was over a year ago now. We built these services for getting channels open from us in a similar way to how an ISP opens a connection to your phone, right, or your computer. And so this became later evolved into the LSP notion, the Lightning Service Providers, and now it seems like both that Lightning Labs is working on a service in this area, and there is functionality in the Phoenix wallet that is very similar to things that we built, and Breeze wallet is doing things in that direction as well. So it's and when we built it, it was definitely still is. I mean, it's a tool for power users, but it definitely started off a lot of interesting things in terms of like where to build. I think an unexpected side reaction is that it kicked off the usage of the LNURL format, which in the beginning was specifically designed between us and the Bitcoin Lightning wallet to open Thor channels with that wallet. And then it kind of has evolved, and suddenly we find that LNURL is actually fixing certain things that I would say are like design flaws in the original in the original Lightning, which is really cool. And I think that's like the LNURL community is probably the most vibrant community right now in terms of building things with Lightning and thinking about these things and so on.
Yeah, there's definitely a few contributors there. Fiat Jeff and I forgot the other guy's name who I was thinking of. But yeah, there's a few of these guys who are out there trying to get like LNURL, which is a really slick thing from a user experience point of view, because, people who want to play games and then withdraw their sats and things like that using LNURL is very, very slick compared to the typical copy paste flow. And that might be another way that people start getting into Lightning, just because it's easier if they want to do those small spends and with LNURL.
Yeah, I mean, it fixes it fixes this thing where Lightning uses a different UI than transactions usually do for deposits and withdrawals, which I think maybe is one of the holdups for exchanges adopting Lightning, that they need to build a slightly different UI flow and educate their support people and so on. Whereas with Lightning URL, you literally have your deposit address, and you can scan the QR code, and everything works like in the old world. I would probably say that if I were an exchange looking at integrating Lightning, I would probably start with doing deposits over LNURL, because it's just so simple, and it's it fits with all of your front end code that you already have. It makes things easier for everybody. Yeah, and I don't know why like when the Lightning protocol was designed, that it was decided that it would focus on the invoice payment model. I guess there's definitely benefits with that as well, but we're also seeing that there's benefits in doing things that are compatible to the old world, even if it's less efficient.
And I know some of the Lightning developers like Rusty are interested in trying to build something like that, like offers and things at the protocol level. But until then, LNURL seems to be the...
But that's the thing that we always have in crypto, that we're building these really sophisticated things, where I would argue that maybe we should like start with, okay, like can we get the 10 largest exchanges on Lightning? Can we get it integrated into most wallets? Like, for me, that's always been that. Like my interest is usually in getting the things that we do have out, rather than focusing on like what's the coolest thing that we could build. Um, I think that when things are being used, that's the coolest part.
Right, yeah. And look, to be fair, there are some things that, it kind of takes being used in practice to realize what's needed. And so...
Oh, for sure. And then there's also the whole area of when you build new things, then maybe people will actually use these things in ways that they haven't done before, which is the really cool part. So I'm not I'm not talking down on building cool new things on Lightning. On the contrary, I want to encourage it in every way. But I also want us to remember to get it out there and to get it used.
Maybe another angle is over time, although this won't be for a little while, but maybe there's some level of privacy benefit there around using Lightning as compared to, let's say, a naive Bitcoin transaction. Obviously, it's probably not as private as using a CoinJoin transaction, but I guess it's a bit of a debatable point around, at least it's not hitting the chain and being recorded forever, right?
Exactly. Like, I don't know. I think that the privacy aspects of Lightning are quite underestimated. Like everything, it doesn't solve the whole problem forever. As even a coin join does not solve the entire problem forever, but it does solve the problem of on-chain analysis to some extent. And I think that I'm a little bit, I guess, I would have wanted for there to be a privacy focused Lightning wallet by now. I'm not sure why we haven't seen it either from some of the privacy focused wallets that are doing coin joins, or the other way around. But intersection of coin joins and Lightning should actually be quite useful.
Yeah, I think that's kind of the dream. And it may just be that we're just super early, and right now developer time, reviewer time, etc. is so limited that teams have had to, I guess, prioritize which one they want to do.
Yeah.
And so then I guess naturally they've either done one or the other. And so I guess that's probably at least part of the reason why we haven't seen kind of a meshing of CoinJoin and Lightning, even though there would be some cool benefits, like theoretically.
Yeah, I think the benefits would, like I said, they're big, and not just for privacy, also for the efficiency of opening Lightning channels. Opening them coin joins would probably be a good idea. Again, I know that Lightning Labs is working on Loop and so on that are doing these things as well. So these things are happening, and it is evolving at like the tech is evolving at a good pace, I would say. Yeah. The question is how we can get it into more users' hands, and maybe that's the interesting topic to discuss, is like how do we get more of the users to care about the things that make Bitcoin unique. Maybe that's an interesting topic.
Yeah, well, I think, technically, I mean, if you do it correctly, like you could be more private if using Samurai Wallet and so on, where I think because there's been discussion or people hear on the news that, oh, this person using Bitcoin got busted. They think, oh, Bitcoin's not private, and okay, technically it's pseudonymous, etc. But if you use it the right way, if you use the right techniques, you can use it privately. But it's just a bit more. It takes a little bit more work, right?
Right. Well, I mean, look, many people. It is a bit weird that there is no clear answer to the question, like, is Bitcoin private? Yeah, well, it might be if you're a sophisticated user and you know which tools to use and how to use them. But it definitely isn't by default. And a lot of people that get busted because they buy bitcoins on an exchange where they give their personal information and they send coins from that exchange to a dark web to buy drugs, and then they get busted. Yeah, like and it's tough because there's simultaneously the idea that it is private, but there's also the idea that it's not private. And I know that it's tricky for a newcomer to assess what's what.
Yeah, and I totally sympathize, because to a person who's not deeply into this world, like say you or me, like we are, it can be quite confronting on the outside to sort of see what to the outsider might look like these crazy holy wars going on between all the between the privacy wallets. And I mean, I personally, yeah, I mean, I'm kind of more on the samurai wallet side there.
Do you want to elaborate on that?
Yeah.
I want to hear. Like for me, I observe and I think I'm leaning in a similar way, but it's hard because I'm not sophisticated enough to assess the actual tech on it, and given the gravity of the accusations, it's a little bit scary. Let's say
Difficult, yeah, and I mean, certainly
I want to hear your thoughts.
I have to be careful here, right? Like, I certainly, like, firstly, I want to say I'm not a privacy expert, right? Like, this is from my reading, from my understanding, from my talking with various people in the community. I think right now, today, if you want the best possible Bitcoin privacy, I think if you run your own Bitcoin full node, like your dojo, and you're using Samurai Wallet Whirlpool, and you're using the correct post mix tools and so on, you're doing Stonewall X2, these transactions that either simulate a coin join or they are a coin join. I think that to me makes the most sense. But in terms of like this whole kind of back and forward warring and disclosures and vulnerabilities and so on, I think, to me, the reason I think the Samurai Wallet guys are, I think their approach is better, is that they have set up their wallet in a more holistic way, that the user doesn't have to consciously make so many decisions about what they're doing. So, for example, it's very easy for a user to, in Wasabi, to like, last I checked, that there's like a send all button, and some of the comments that come up around things like, oh, see, that was just user error. And at the same time, you see even like Wasabi, users or Wasabi contributors themselves who've like doxed things from trying to do Wasabi. So for me, that is probably, I just think the samurai approach, like assuming you're running your own dojo, I think that's a more holistically sound approach. And I think the other important part for me, at least from my reading of the articles and the back and forth, is that I think the samurai approach is around aiming for the super high quality, high entropy mix, and actually creating no deterministic links between the coins going into a coin join and the coins coming out of a coin join. Whereas I think some of the criticisms that have been leveled at Wasabi are in relation to things like having unmixed change, not actually creating zero deterministic links in the coin join, having address reuse in the coin join, and just consistently having address reuse. So to me, that seems like, well, hang on, address reuse has never been cool, right? So I guess there are a few points there, but I mean, what do you think?
Yeah, I second your analysis on all points, I would say. But again, yeah, it's the tricky part is I think we all agree that the sensible defaults are very important, especially when it comes to this stuff. And again, it kind of goes to show that even when using privacy wallet, you're not necessarily always safe. So
Yeah, yeah. And look, I think in fairness, the criticisms that people would level at Samurai, right? They would say things like, oh, but hang on, they have mixing where it's not only dojo pools. And so theoretically, even though the Whirlpool coordinator is a different server to the dojo server that they run for the users who are not able to run their own dojo, but I think it just gets really complicated because now you're starting to think about, okay, so if you run a dojo and you do the correct thing of mixing and remixing, crucially, then it would be to me it seems extremely like tinfoil hat unlikely that someone is gonna like, okay, hypothetically, let's say you're like a democracy activist or some human rights journalist or activist in some country with an oppressive government, and let's say you set up your dojo and you receive and you do the correct flow using your own dojo. What's the likelihood that this oppressive government is going to like go to the Iceland server and like somehow and like get all the XPubs and then try to reverse out from that, because they won't have your XPub, so then they would have to try to reverse out which one is yours. I mean, and then the other accusation as well, and again, this is difficult in the space because everyone's trying to fling stuff at the other guy, and they're trying to say, oh, well, see, what if you're Chainalysis, or what if you're actually just selling the info because you have an incentive to do it? And then it just becomes like really difficult for anyone to sort of prove that they're a genuine person trying to provide privacy tools. And I guess you've also got to consider, like, if they really were malicious, I don't know, whether it's Samurai or Wasabi, like, would they have acted the way they did? I mean, I guess that's also,
It's
these are also
impossible to
things
know.
that
Yeah.
people have to consider.
Yeah, but it's. I think I agree that you should be careful with attributing malice and accusing of malice. It's a pretty strong accusation that needs a lot of evidence. At the same time, I think that it is interesting to think about the question of like whether or not there are bad actors and in the space and what to do if someone should turn out to be a bad actor. Not to say that anybody is a bad actor. Like I've had a couple of interesting conversations with my father. We're originally from the Soviet Union, who told me that he found out, and when he was a student, he was like active in different some kind of student theater where ideas were discussed, which were not supposed to be discussed, and that they found out many years later that one of the guys in their theater group was an informant, and that this person was informing on like nothing had actually happened, but that he was just filing reports to I guess some part of the political bureaus about the things that were being discussed in this students' theater group, right? And it kind of got me thinking about the crypto space as well. Like, who knows? Who knows if there are any intelligence actors operating in the space? What they're doing? Probably most of them are just collecting information. What kind of information do they get, and so on. So I think it's useful.
Yeah, I mean, it's scary,
to
right?
have a adversarial mindset. I think that this is one of the key things about Bitcoin is that what if the service that I'm using is evil in different ways, and what are the different ways that they could be evil against me, and so on. Yeah, which is like
Yeah,
why
certainly.
this like privacy focused things and so on are important.
Right, and I think you definitely raised a lot of interesting points there because, well, I actually recall when when I went to Baltic Honey Badger last time in Latvia, and I went to the museum, one of the museums there, and they were talking about the way Checker would try to compromise people, and so they would kind of hold it over someone's head like that. We're going to do something to your family or whatever, and that's why we need you to become an informant for us, right? And so it's kind of, there are all sorts of crazy things like that could happen, and
Exactly. Like
it would
somebody
be
could be a bad
naive
actor
not to.
without being a bad person, right? Like they could be pressured or whatever. Yeah. So yeah.
Yeah, so that part is tricky, and I guess you sort of have to look at what people are doing, what info you're giving to that party as well, right? Because depending on what the wallet is and what the way you use it, do you have to give up any info? Do you have to give a name or email or whatever? And what could be done with that information?
Exactly.
So
And not just by them, but also by I guess any hacker that has access to that information.
yeah, so it's a tricky space, and I think you kind of have to look at, well, I guess one indicator that I've noticed that some of the privacy wallet guys try to look at is darknet market use, right? So they're not like explicitly, that's not the only market for them, but obviously it is a market for them. And I guess if you see people using these techniques and technologies in the darknet market, then there's probably it's kind of there's real world practical use, and there are people who are literally relying on that technology.
Well, I think it's I think like from the studies that have been made that show that darknet use is a very small fraction of the activity on the network. I actually think that like there's probably it's not the most meaningful to talk about darknet use with regards to privacy. Like I think that privacy is such a huge factor. One thing that I've come to realize lately, or maybe a little bit not lately, but been thinking about lately, is that if you think about like old timer Bitcoiners, like people who mined a bunch of coins in who knows what, like and they're sitting in a considerable wealth in Bitcoin, and for them to sign up to a service that requires you to do full KYC, so you register your passport and your address, and probably make an on-chain transaction that connects to the rest of your wallet. Like, is whatever it is that service offers you, is that worth it? Right, and when you start thinking from that perspective, like, okay, I'm sending in my address and passport here to some service. Who knows? Like, even if the service is probably super honorable, but what if they get hacked? Like this, eventually, if these data banks become huge honeypots, and eventually, like somebody wants to hack it, and then suddenly it says there, hey, so and so lives on that and that address, you know. And just from a perspective like that, I think it's enough to motivate like why we should want privacy on its own, and that it's like it's not necessarily because we're looking to do something that is disallowed. It can be, I mean, it should just be a default state of things.
I guess, yeah, just people have to be careful if they're spending, for example, out of a big UTXO. Well, then that's especially where you want to be careful around using coin join techniques so that you've broken the link, and that people can't trace that back on the chain to your big UTXO, right? So that's
right.
probably.
But it also depends on, like, it doesn't. If on the other hand, if you, well, I guess like privacy is important on all sides, and coin joins is good for the on-chain privacy, but I think it's also important with the off-chain privacy in terms of where you custody, pun intended, your personal information, right? And because like if we talk about custodial wallets and so on, they hold your coins for a while until you withdraw them. And there is that risk profile. But somebody who has your personal information, they have that personal information forever.
Yeah, that's tricky. And depending on the data retention laws, like I think in Australia, it's something like 7 years, or when the customer terminates their relationship with the supplier or the vendor, it's 7 years from that date, I think, in certain financial services contexts. So, but then the other thing is, you don't know how good, say, these banks or whatever are with data deletion. So they might have accidentally kept it because they weren't good with data deletion.
I mean, they should have backups. I mean, again, like 7 years or forever, or whatever it may be. Like, it makes sense to be careful with what traces you leave about yourself on the internet. I think it's
right.
It's at this point it should be seen as like a fundamental core principle, something that is very important to fight about. And I guess it's one of the things that also, I guess, part of the in the samurai guys crusade about like that there is a trade-off between wanting the number go up, the adoption and privacy, right? And we see this trade-off in play a lot of times when, I mean, like for example, we have this. Like the stacking sats meme, which is a great meme, but it also usually implies that you register with some service that will require your personal information to be stored in a data bank, right? And so,
Right.
whereas if you say that hey, people should not use services that require your personal information, well, that limits significantly, right, the realm uh, of possible services for people to use. And so there is this weird trade-off. I mean, an extreme example is like these fully custodial Grayscale or the Bitcoin ETN here in Scandinavia, where you clearly don't have control of your coins ever, but you buy them through an exchange. It's super simple. It's good for getting number to go up, but it doesn't achieve many of the other goals, and it probably makes it harder to achieve those goals of privacy and autonomy and so on in the long run. And it's I think that like conflicts about values are only interesting when both values and both sides are desirable, right? We want number to go up, but we also want right, but we also want privacy to go up, in whatever numbers we measure that, and when these two desires are at conflict, creates an interesting that becomes an interesting question of values.
Yeah, let me give you an example. I guess maybe the way I'm thinking about that is maybe it's like a parallel with how if you look at the different core developers and their thoughts on things, like you might see, okay, on one end of the spectrum, you've got, Luke Dasher who wants 300 kilobyte blocks. And on the other end of the spectrum, there are some developers who believe that maybe longer term, we need to see a rise in the block size. And then there's some in the middle who are kind of more like, so long as anyone like an average person can run a full node, well, that's what's important, what counts. Maybe it's a similar thing here with privacy as well. It's like so long as the average person can attain privacy using Bitcoin, if they buy non-KYC or if they earn it non-KYC or if they mine it and they use the right privacy techniques, can they be private? And I guess maybe that's a good middle position. What do you think?
Yeah, maybe I don't know. Like I think that we should consider. I mean, if you look outside in the world, there's turmoil, and it's not unthinkable that in a world of turmoil, Bitcoin will be successful in some ways. And given that turmoil is chaos, that means that some of the powers that be will be opposed to it. And so if there is definitely, I would say, a risk of the Bitcoin network being split into the KYC side and the not KYC side, and that would be not great, right?
Yeah.
And so I don't know, like I don't have any remedies to these solutions other than the things that are being discussed by smarter people than me. But it is a topic that I think we should be mindful of. That we don't. I mean, I guess I mean, maybe it's similar to how, like, in a band. There comes a point where they get the choice of selling out. Like, right? Do we do the popular music that is gonna get us paid, or do we do the music that we actually believe in?
Yeah.
And maybe there's something like that here as well. And again, it's probably not a binary choice, but rather some type of scale, and figuring out what is the appropriate level that we want to be at. But it's also important to acknowledge that there, like also that like I'm also simultaneously to this. I'm also not a fan of people that are like preaching that you must use Bitcoin like this or you must use Bitcoin like that, because the whole point of Bitcoin is that you can do whatever it is that you want with it. Right. So, and that we kind of need to also acknowledge that this should be a network where all of these different participants can, in fact, interact with each other as best as they can.
Yeah.
Maybe that is the goal to optimize for, is to sort of I don't know, to optimize for differently minded people to be able to interact. Bitcoin is the money of enemies and so on.
Yeah, that's right. And well, I guess the other thing with that is also, could it kill Bitcoin if it was no longer fungible? Would that be a problem, or would it actually still be an overall win in that it stops governments from inflating further? And so I guess
Right,
if you were
exactly.
to maximize, yeah, and that's a tough kind of conversation to have, because there might, so hypothetically, if every sat was KYC'd, would that still eventually, like some, longer term, would that still result in governments losing the power of money, and maybe that's still a win overall? Or do you think, we can try to get both, and we can like have a hard money that is also private? And there are others who would make that argument that you can't have this unless it is private. So it's a tough question. I don't think I've necessarily got any good answers, and it's something that will just have to evolve over time, I think.
Yeah, I mean, Bitcoin is a bundling of a bunch of different things, and maybe there is the sound money aspect of preventing government inflation to it. There is the privacy aspect. There's a bunch of this. There's the technical sort of anybody can build on it, permissionless aspect, efficiency aspects, and it's like a composite of these things. And I don't know. I think we're also starting to see, to some extent, other projects that try to satisfy parts of these things, but not other things, and so on. Right? I mean, you should be, in a lot of ways. Like, I would argue that many altcoins are fiat currencies, right? They're private fiat currencies. But what is to say that the cryptocurrency must necessarily be sound money? Maybe a fiat cryptocurrency is also useful for certain things for certain people and so on. And like, I'm not arguing for that. I'm just rhetorically here.
And I think the whole conversation around CBDC, central bank digital currencies, and whatever is only
Right.
that's only going to grow. So
Right.
obviously we'll all be here with our bitcoins, and I think over time people would just see number go up in Bitcoin, so they'll want to get some, and then it's a question of how ready is all the Bitcoin tooling and services to kind of take that on.
And maybe it's always going to be a struggle, like like just like privacy is on the regular internet. It's just an ongoing struggle that will always be ongoing. Maybe the battle lines will change over time, but there will probably always be people that argue for more privacy and try to build things for more privacy, and others that build for other values such as efficiency, for example.
Yeah, that's right. And you mentioned battle lines. I think you were, just before we went online, we were chatting about this idea of the battle lines that have been drawn around COVID-19, or as I prefer to call it, Hysteria 19. But tell us, what do you think?
Well, I think that it's been, for me, it's been a very interesting last 6 months. I think it's been very interesting for everybody. But I see it as a great opportunity to evaluate the biases that we have and the different inclinations in thinking and so on. Like, and it's curious how, for example, in the beginning, it felt like there was the people were a little bit all over the place in terms of like the assessment of the danger and what should be done and so on. Whereas like over some time, it kind of let's say settled down into the usual political camps, both in terms of like left wing and right wing within each country, right? And the countries are very inconsistent with other countries, but also in the crypto world is that like the meat eaters tend to say that Hysteria 19, that it's all it's not a thing, whereas if you go on the sort of Ethereum camp, is definitely a thing, and so on. And it's interesting how we went from that to this, but I think it's also interesting to assess. Like for me, it's a sign of like a sign of groupthink is when you agree with the group on every subject, right? So, for example, I guess if your if your views on the Bitcoin block size debate are consistent with your views on dietary preferences, consistent with your views on Corona strategy, then that at least warrants evaluation. It might just be that all of these people are just happened to fall into the same lines, but it's also possible that it's not, and in some cases. In some cases, also, I think, like for me, I ended up. So here's an interesting analogy that, like, many Bitcoiners, in the question of like government mostly good or government mostly bad, right? Most Bitcoiners tend to fall in the government mostly bad category, which led to a situation in which most Bitcoiners were opposed to the specific country's Corona strategy.
Yeah.
Right? Which created this weird battle of like, no, my country's Corona strategy is worse than your country's Corona strategy. Yeah, because that is kind of where we are, because like you feel that the Australian is hysterical, whereas I feel like the Swedish one actually maybe led to needless people dying. But and it's kind of like, I don't know. It's these things are curious, and at the same time, like when you find yourself on an opposing camp, it's also an interesting moment to reflect. Like, hey, suddenly I agree with Balaji Srinivasan on a lot of things. Okay, interesting. I don't usually do that. Okay, but like it's helpful for assessing, like, okay, is it that I'm inconsistent here and actually he's wrong about all things always, or is it that maybe he's right about this thing, or I don't know. It's I think this whole period has been useful from those regards, and also given that like the different camps have been making predictions about the future, that within 6 months, many have already been able to be evaluated, right? So we can sort of assess and draw some learnings, like, okay, these things that we believed turned out to be wrong, why were they wrong, and these things that we believed actually turned out to be right, and why did we believe them, and so on.
Yeah, I'll tell you what, I saw some interesting correlations as well, right? So, as an example, and you probably, I wonder what you think, but isn't it funny how a lot of the same people who are pro Brexit and were pro Trump in the 2016 election, and let's say a lot of the people who are more on the climate skeptic side tended to all line up on a similar side in terms of COVID, don't you think?
Right. Except for Sweden. In Sweden, we have the opposite. And that's kind of, I guess, what made it interesting for me. Because again, it's this government default bad attitude that we have, which I, in a lot of ways kind of like. But like here in Sweden, for example, probably fair that we are in a similar camp with the in the Corona question with the Brexiteers and Trump and so on. But like, don't tell anybody that. Like, if people found out that our social democratic government actually shares a lot of the same views with Trump, like people will go bananas. But like if you go issue by issue, then there's a lot of similarities here. It's like it's more in alignment than not. And so again, like this is a good opportunity to like, okay, assess. Where are we? What is the different group things taking us? It got me actually thinking about an aspect of if I can go on a rant, 5 minutes maybe.
For sure.
An aspect of like of maximalism, and specifically the flavor of maximalism of dismissing the new thing, right? Like I think that for example, okay, zoom out. We're still on the COVID question. If we look at Sweden's Corona strategy, which has been, I guess, most people agree, slightly different in attitude from the rest of the world. It's not a controversial new strategy. On the contrary, the Swedish strategy is the tried and tested since 100 years back. And the author of it is also wrote one of the textbooks and so on, right? And so I think that, and you'll see where I'm going with it, because this is more about Bitcoin, but the Corona stuff is an analogy. Is that what happens in the world of I think, at least this is all like my speculating about these things, is that in the world of infectious diseases, there's usually a lot of noise. Like, this disease popped up in Asia, and it's probably not going to be anything. And most of them are not going to be anything, right? And so you like probably best to not overreact to every new thing that gets some hype somewhere. Um, and so over time, and I guess this is like similar in my view, to how like projects in crypto show up, and it's like, yeah, it's probably not useful, and it's probably broken. It's probably best to like not devote attention to it, because most of it is going to be crap. Like the vast majority of it is going to be crap. And so, but over time, like this type of attitude is going to be right in 99 point something percent of the time. And I think that if we look at the Swedish Corona strategy, it was definitely right about a lot of things. Some of them controversial, right? It's been right about probably about that it's not beneficial to force people, and that maybe getting buy-in from the people is a good thing. It's probably right about the schools. It's probably right about
Agree.
but a lot of this stuff. However, it was not right in terms of dismissing the danger entirely. And that led to a situation where a lot of less informed and more hype sensitive countries that did 90% of things wrong still ended up with a better outcome. Because of it's like a Nassim Taleb type thinking that there's like the risk of black swan things, and what you end up missing when if you get too good at dismissing things that are mostly noise, is that you risk dismissing the one little thing that is not noise. And so if you go back to the crypto thing, like like part of, I think, the maximalistic argument is that 99% of crypto projects outside of Bitcoin are just noise. And they are. And I've in the past been saying things like, hey, I actually respect the no coiners because they're like 99% right, and they get there with like no effort, right? It costs them like no thinking to just dismiss all of it, and they're right about 99% of the stuff. But I think one thing that like I have a little bit nuanced my view is that sometimes it's not the percentage of times that you're right that matters. Like, and if you think about in terms of like, if you zoom back, if you talk Bitcoin, about early Bitcoin history, and you zoom back to 2010, 2011, and you take an attitude of like, I'm going to invest money into 10 crazy Ponzi scheme looking new money type setups, right? And one of them happens to be Bitcoin, and the other nine end up going to nothing. You're still going to be a very rich and successful person now, right? Given the outsized returns, and so it's and probably, and it's probably going to get me flack for this, but like if you're in 2014, if you invested in 10 different altcoin projects, and one of them happened to be Ethereum, probably would have been a good investment. And so even if you entirely lost your money in the other 9 of 10, which is probably also goes together with like how the sort of the VC Silicon Valley part of the community were also the ones that very quickly identified the danger of the thing. Like we had, for example, Balaji Srinivasan and some other people that were like very early in calling out that there was danger abound, and that like probably even if they're wrong about 90% or 99% of the stuff, then like even if you're wrong about 99%, but you happen to be right about the one thing that matters, then maybe that is actually a better outcome than being right 99% of the time. What do you think?
So I guess some of your comments are you're sort of tying into that idea that maybe, some people who bought in and it was an accident of timing and of luck versus skill. And, some of those people who, if they just bought into ETH early or whatever, then they would have gotten rich if they sold out at the top or whatever. But I think to me, there's more to it than that. I guess, look, we always have to maintain some level of humility. But at the same time, I think, it is possible to reason about these things and to try to sort the wheat from the chaff. And I think those people who were able to do that with Bitcoin and see, oh, okay, hey, this thing with a fixed supply, oh, wow, like no government controls it, like that would be historically significant and it's important. And that's why I wanted to get some and so on. And I guess it's not to say that, oh, yeah, whoever got in, because look, some of those people who got in early, maybe they were lucky. But I think it's also fair to say some of those people who got in early were skilled. And I think in the Bitcoin world, like bringing it to the kind of Corona 19 or whatever, there were some who were better at sorting the wheat from the chaff and figuring out, oh, hold on, some things aren't smelling right statistically, that people are overstating the level of risk and they're overstating the CFR, the case fatality rate, and they didn't statistically sample it correctly. And that's why it looks right now like it's really deadly. But actually, if you look at where the sampling was better, then it actually isn't that high. And so it is a real virus. It's just that the risk is being dramatically overstated. So I don't know. I guess that's kind of high level how I'm thinking about it. But did I answer you there, or I'm not quite sure?
My audio cut off for like a minute, so I missed a big part.
Oh, sure. So I guess, So I guess, like, summing it up, I guess some of it is an accident. Maybe for some people it is an accident of luck and timing, and for other people it is really a question of skill. They were just better at sorting the wheat from the chaff. And for some people who are in this, and I'm probably in this camp, I'm in here for the sound money aspects. And I obviously now I also want the privacy aspects of Bitcoin, but that's kind of the prior part. But when it comes to like, was it luck or skill, I guess I have to sort of go more on the side of, hey, there was some skill involved, while still, maintaining some level of humility here. It's not like, oh yeah, because I got this one thing right means I'm right about all these other things. Certainly not. But I guess it's like the whole precautionary principle aspects of it. I just think I like Taleb's books, but I kind of think he got this stuff a little bit wrong. I think he ended up a little bit on the overstating the risk level.
Right. I would say that the thing is that what you don't want to end up is with being smart and ending up with a worse outcome than somebody who is being dumb, right? Because then if you're being smart and you end up outsmarted by somebody who's actually dumb, then maybe you weren't that smart at all. Maybe like like there is this Clark's law, it says that like when a distinguished but elderly scientist states that something is possible, he's almost certainly right. But when he states that something is impossible, he's very probably wrong. And I think that there, no, I guess like what I'm trying to say is, I guess that I don't know. To be honest, I'm not sure what it is that I am trying to say here either. Because obviously, like if you end up directing your attention at everything that has hype, you're going to waste a lot of time. Yeah, but I think that here as well, probably that there is like I think that what's important is to have maybe and probably Taleb has better writings on this, but figuring out proper alarm systems for when you should no longer ignore things, right? And so that you can ignore a lot of things, but like if this happened, then I actually need to pay attention to this hype sensitive thing.
I think sometimes you just have to take a critical eye to these things. But I also think with the comments around like, did Sweden make the wrong call and things, I think there are some other factors here as well. Like I think Sweden actually took a more long-term sustainable approach right now. From Anders Tegnell, I know he was saying we made some mistakes in terms of protecting the nursing homes, but overall, I think he was mostly satisfied with it. And I think a lot of other countries have just pressed pause, and when once for economic reasons, once they press play again, they're going to get all those deaths come again. And unfortunately, it seems that some of the things like hydroxychloroquine and all these other things, like some of the treatments have been very politicized, so then it kind of becomes difficult to use that. So I don't know. I think in a year's time or so, it'll look like Sweden made the right call and they were able to open up sooner and take less of a hit overall because they can actually open up and they can have tourism and stuff. Whereas who knows with some of these other countries whether they will be able to open up that soon. And there's all these other costs, right? And
if you look at Sweden's neighbors, they're all opened up for everything except for Swedish people. Their economies are spinning better than the Swedish one, and so on. And
yeah,
like, in terms of like quoting Anders Tegnell, he's quite similar to Donald Trump in the sense that if you want a topic and an opinion, you'll find a quote where he says that, but he also says the other thing. And so so it's like I don't know, and I don't think that you and me discussing the Corona strategy itself is maybe the most interesting for like given that we're who are we to judge? I'm just
Bitcoin podcast.
Yeah, I'm more interested on about like I guess like the questions of like. What sensitivity should you have to the things that have hype? I guess is one interesting topic, and I guess generally like the observation that like the hype sensitive people that are often in venture capital seemed to pick up. Well, at least it was like different in who picked up what in terms of this. In terms of the situation, and yeah.
I think for me, I've just stayed Bitcoin only the whole way. So for me, I
right.
Sometimes it's like shiny bright. What's the thing? Shiny bright thing syndrome or whatever that happens in IT, and people just kind of always chasing after some shiny thing, and I think it can be a trap that way.
But ask yourself this, like when you first acquired some bitcoins, if you did, was that decision? Did that come from you being smart, or did that come from you being YOLO? Right, because it's important. It's important. You can afterwards rationalize. Oh, I was so smart and I did the analysis. Or maybe it was that. I'm not. I don't know about you, but for a lot of people, definitely that decision was YOLO-esque. And so if people continue doing YOLO decisions, and it also explains. Like I think it sufficiently explains why the broader industry looks the way that it does, because it uses this dynamic to sell shitcoins to people, right? And so on. And like I've heard otherwise smart people saying that, look, I know that this might be a scam, but if if I invest in 10 of them and one of them ends up being the next big thing, then and 9 are a scam and I'm still in the green, then well.
I think for me, I came in with the vision of getting rid of central banks, right? So now in the first time I ever bought Bitcoin, was I sure that Bitcoin was going to do it? No, but I think it's probably fair to say I thought it was like a very good risk adjusted bet, right? So I thought, okay, for the amount that I'm putting to risk here, it's well worth it. And then over time, as I learned more, well, then I started, regularly accumulating. And I guess that's my story on this stuff. Obviously, people have their own lessons and how they came into it, right? Because some people came in from like 2017, got wrecked, and then only learned, and there's a lot of people in that camp. So yeah, but I think you're right that we have to kind of self-assess and think, well, why am I really here, and what is the reason that I think Bitcoin is going to win?
Sure, but that's the motivation for why we stay here. I'm talking about like the motivation for making important decisions, right? And or I guess making decisions at all. Like probably for most people, when they bought their first Bitcoins, it probably wasn't an important decision. Like probably most people did not put life-changing amounts of money into Bitcoin at their first contact with it either.
Well, I think it's kind of like a testing the waters, like you start out, you dip your toe in the water, and if it works out well for you, well, then you keep going with it.
Exactly.
I mean, it's probably not that distinct from running a business, right? Like you might start a certain product line and then it becomes popular. So then you put more into that.
Exactly.
So yeah, I guess that's kind of how I think of it. I think it's kind of like you start out with a small amount, you dip your toe in the water, and then you kind of go from there if it's working out well for you. So
right, but then again, that's why the industry is where it is, because a lot of people continue dipping toes into the water. That's the thing.
They were dipping their toes in the wrong water, though, Sergej.
Right, but that is the thing, right? And here's where we get back to it: is that even if it's the wrong water 99% of the time, if the 100th time is more than 100x outcome, then maybe it is actually the right water. Maybe, I don't know. Like I think that, like I said, I think we're going in circles here, but I think that having these heuristics for dismissing things that are bad is obviously a good idea. Anything else would probably not work. But I think that it's also important to, I guess, have heuristics for when to snap out of it, I guess, and when to find out like what to pay attention to, I guess.
Yeah, I think it's just a qualitative filter that you have to apply. But anyway, look, I think we'll probably leave it there. We've covered a lot of interesting topics. I've certainly enjoyed chatting today. Sergej, before we let you go, where can people find you and where can they find Bitrefill?
Good question. You can find Bitrefill at bitrefill.com. You can buy stuff with your coins using gift cards. Actually, in Australia as well now. Other than that, you can find me on Twitter. I'm at Zigamon. I'm sure there'll be a link next to this podcast.
Excellent. Well, thank you for joining me.
Thank you as well.
Get the show notes and subscribe at stefanlivera.com. Thanks, and I'll see you in the Citadels.